Hi, Nationwide. Investing in cryptocurrency can be an exciting venture, but it also comes with risks. For beginners, it's crucial to understand the basics, risks, and strategies before diving in. Here's a beginner's guide to investing in cryptocurrency. Understanding cryptocurrency? What is cryptocurrency? Cryptocurrency is a digital or virtual form of currency secured by cryptography, making it nearly impossible to counterfeit or double spend. It operates on a decentralized technology called blockchain. What types of cryptocurrency? Bitcoin, BTC, the first and most well-known cryptocurrency. Ethereum, ETH, known for its smart contract functionality. Ripple, XRP, Litecoin, LTC, and many more. Blockchain technology. Blockchain is a decentralized ledger that records all transactions across a network of computers. It ensures transparency, security, and immutability of transactions. When getting started, educate yourself. Before investing, learn about different cryptocurrencies, blockchain technology, and how the market operates. Follow reputable news sources, blogs, and forums to stay updated on the latest trends. Choose a reliable exchange. An exchange is a platform where you can buy, sell, and trade cryptocurrencies. Popular exchanges include Coinbase, Binance, Kraken, and Gemini. Create a wallet. A cryptocurrency wallet is a digital wallet used to store your coins securely. Two main types: hardware wallets, physical devices, and software wallets, applications or online services. Hardware wallets like Ledger Nano S or Trezor are considered more secure for long-term holdings. Strategies for investing. Start small. Especially as a beginner, start with an amount you can afford to lose. Cryptocurrency prices can be highly volatile, so it's important not to invest more than you can handle. Diversify your portfolio. Spread your investment across different cryptocurrencies to reduce risk. Invest in established coins like Bitcoin and Ethereum, as well as promising altcoins with potential for growth. Long-term versus short-term. Decide whether you're investing for the long-term or short-term. Long-term investors, HODL, hold their coins through market fluctuations, aiming for substantial gains over time. Short-term traders buy and sell frequently to take advantage of price movements, requiring more active management. Stay updated with market trends. Cryptocurrency markets are influenced by various factors like regulations, technological developments, and market sentiment. Keep an eye on market trends, news, and analysis to make informed decisions. Understand risk management and volatility. Cryptocurrency prices can experience significant fluctuations within short periods. Be prepared for sudden price swings and avoid making impulsive decisions based on emotions. Understand security risks. Cryptocurrency exchanges and wallets can be vulnerable to hacks. Use two-factor authentication, 2FA, strong passwords, and reputable wallets to secure your holdings. Understand regulatory risks. Regulations surrounding cryptocurrencies vary by country and can impact market sentiment. Stay informed about legal developments and how they might affect your investments. Aware of scams and frauds. Be wary of schemes promising guaranteed returns or asking for your private keys. Research projects thoroughly before investing and avoid pump and dump schemes. Additional tips for you. Do your own research, DIR. Avoid blindly following tips or advice from others. Research projects, teams, white papers, and community feedback before making investment decisions. Learn technical analysis. Technical analysis involves studying historical price charts to predict future price movements. While not foolproof, understanding basic technical analysis can help with timing your trades. Hodl with patience. Long-term hodling, is a popular strategy among cryptocurrency enthusiasts. Patience is key as the market can experience extended periods of volatility before seeing significant gains. Understand tax implications. Cryptocurrency transactions may have tax implications depending on your country's regulations. Keep records of your trades and consult with a tax professional if needed. In conclusion, investing in cryptocurrency can offer opportunities for growth and diversification in your investment portfolio. However, it's essential to approach it with caution, do thorough research, and be prepared for the inherent risks involved. With a solid understanding of the market, risk management strategies, and a long-term perspective, beginners can navigate the world of cryptocurrency, investing more confidently. Thank you for watching. See you in next video.